Hey guys, TommyBryson here, and the stock market is crazy, okay? It's crazy right now, but my advice is basically just keep investing. And by the way, in 2020, we've had historical highs, lows, and also historical events happen all in 1 year. And by the way, to the point where my portfolio was actually down around 30% and it's up around 40 to 50%. And that's how crazy the stock market actually is today. And by the way, in this video, I'll show you guys my portfolio and what I do to maintain my portfolio. But the point is, if at any point you want to copy what I do, feel free to do so, because basically I got all these ideas from very old people that have been investing for the past 40 to 50 years and also have Nobel prizes in economics. Okay, investing is not about reinventing the wheel, it's more about, hey, what do you do? Does it work long term? Yes. Well, I'm gonna go ahead and actually do that also, because basically it's backed up with data. So at any point, feel free to go ahead and copy my portfolio. And there is no course, there is no fee, there is no nothing. Okay. And if you guys are new here, I post videos every single day, so make sure also subscribe and hit the bell so you're notified. On top of that, also destroying the like button. Now, the first thing I want to do before I tell you exactly how crazy the stock market actually is tell you exactly what my strategy is and what I actually do when it comes to investing. And by the way, it's not like I have 16 steps or like 20 steps. In reality, all I have is 3 steps I follow every single time I actually invest. And basically, you can do the same today if you actually want to. It sounds like a sales pitch, but in reality, it's pretty simple when you actually know exactly what you're doing. Okay. And by the way, I've read over 200 books so far on investing and money. And the more you read these books, the more simple investing actually becomes. Okay, so here are the 3 things I actually do when it comes to investing. The first thing is basically I have a balanced passive portfolio that makes me money over time, but I don't have to worry about, hey, I have to buy this stock and that stock, because in reality, all I do is invest into ETFs. I buy the entire market and I don't worry about individual companies. And in reality, my target, what I actually buy, is basically 80% stock ETFs and basically 20% bonds ETF, okay? And that's basically what I do. And by the way, guys, I've always been a visual learner. So basically, I'm going to show you guys exactly what my portfolio actually looks like. My passive balanced portfolio actually looks like. Again, 80% stock ETFs and 20% bonds ETF. And by the way, I use M1 Finance to actually invest. And right here is actually my phone, and I use M1 Finance. So let's click right here to M1 Finance. Boom. And here we are. Let me just scan my face here. And by the way, this portfolio right here is real. Here's my phone. I can go in, click out. I'm not good with one hand, but the point is, portfolio is pretty real. Okay, it's not like a fake one. Now, this portfolio, I started up around like July or so it's not really that old. But guess what? It's up around almost 13% in less than 5 months. Now, here is the cool thing right here, guys. Okay, when I click here to my model years portfolio, click it inside. Here are all my 7 investments and what I actually invest into. The 7 ETFs I basically invest into, okay? And by the way, if you want to copy this, don't screenshot the video. I have a link down below to my finance, and when you sign up with my link, you get to copy the exact portfolio if you actually want to. But on top of that, if you are more conservative, less risky, or for example, more risky than I am, I also have a video down below with more options when it actually comes to investing. And by the way, this portfolio right here was made by Harry Max, a guy that has literally a Nobel Prize in economics and is around 93 years old, and till this day is still an active investor. And that's why I use this one right here. But overall, guys, okay, right here, look at this. My small cap investments are up around 26%, extremely high. On top of that, my REITs are up around 11%. My emerging markets, very risky, are up around 17%. And basically, the US stocks, the S&P 500, is up around 12%, which is actually pretty solid. And the international developed markets, Europe, China, big industries outside of the US, are up around 17%. And by the way, the overall goal is portfolio is to basically have a portfolio where, hey, certain parts are up, certain parts are down, but that way you get a very balanced portfolio and you don't carry that much risk, especially by having bonds, corporate and also treasury bonds. That way, when bonds are usually down, stocks are up, stocks are down, bonds are usually actually higher. US market might be up, but the international market might be actually higher or a little lower, but overall it brings balance and also makes the whole portfolio a lot more passive. And that's basically the first thing I do when it comes to investing. This is my portfolio right here. Now, the second thing I actually do, guys, is basically something called dollar cost average. Now, I know it sounds complicated and so on, but in reality, it's pretty simple, because basically what it means is all you're doing is investing the same amount of money every single month consistently and not actually worrying about the price or what's going on in the market. You basically buy the same amount of money in this portfolio right here every single month without worrying about the market and what it's actually doing. So for example, instead of worrying about, hey, the price is up or down, I invest the same amount of money, around $4,500 every single week on the same day without worrying about it. Tommy, why? Because basically, if you buy at a high price, at a low price over a long period of time, around the same time every single week or every single month, eventually what you'll get is the average price. And that is what you want. That way, you don't have to worry about time in the market, which is impossible. I could tell you it's possible and charge you money, but no, it's impossible. And Warren Buffett himself actually says that all the time. So it's better to just invest consistently over a long period of time than to worry about, like, hey, the market is down or it's up tomorrow, I have a trend pattern. Usually that stuff is all BS. I'm just being honest. Just do dollar cost average, and that way you're better off. However, there is one more thing I basically do. The last thing here, okay? And that's number 3. And all I do is basically I automate my entire investment strategy. So in reality, when we go over here to M1 Finance and I click transfers, right here you can see that basically every single month I have auto investments actually put in, okay? So when I click rules here, every week I invest $3,000, then $650, then around $823 every single week, which means that I don't have to worry about investing anymore. Everything is done automatically, and that way I'm not worried about, hey, I'm gonna buy right now or buy later. No, everything is done automatically. By the way, if you want to copy me and what I do, what I would do is basically, let's say you make $1,000 every single week. Well, just invest 10% of that, $100, and automate it into your portfolio, and that way you do dollar cost average and you don't worry about anything whatsoever. But that's what I do when it comes to investing. A balanced portfolio, dollar cost average, and on top of that, just automate the entire thing, and that way I don't worry about it. But however, guys, as you guys probably know, rules are meant to be broken when it makes sense, of course, okay? So basically, although I have these 3 rules, sometimes you have to break them when the stock market goes down like crazy and it creates a buying opportunity, okay? So for example, okay, back in March, the stock market actually fell around 10 to 30%. That's when I say the stock market is going crazy. And today the stock market is pretty high, but the point is, when it actually happened, I went ahead and invested an extra like around 20K instead of just doing dollar cost average, because basically when the stock market is low, you want to buy low at a discount, and that way you make more money over time. That's the whole goal. By the way, that 20K, I didn't invest it all at once, because basically if the stock market went down further, I would have been out of luck. So basically I grabbed 5K, 10K, 5K, and invested it every single week. Like 5K one week, 10K one week, 5K one week. That way, I got the average lowest bottom price of the entire market, okay? So I did like dollar cost average, but short term. That way, I got the best price. That's the first time I broke the rule. However, there was a second time also back in March, okay? And here's my phone again, okay? Because as you guys know, I only really invest into ETFs, right? But in reality, the stock market was so low and stocks are actually so cheap that in reality, I went ahead and actually bought some Delta stock, okay? And I couldn't resist, okay? And right here, guys, here's my Delta stock. And I actually bought around 500 shares. And I'm actually up around 71%. It's almost a one bagger when you basically double your money. And I think in the next like 2 to 3 years, it might actually become a 2 to 3 bagger. Basically, I make 3 times my money, okay? And that's what I did. But the point is this, okay, guys, although you have these rules, sometimes it's good to go ahead and break them when the stock market is actually pretty low and you know exactly what you're investing into. So for example, guys, overall, although right now the stock market is crazy because elections and all this fancy stuff is going to go up, is going to go down, you don't know what's going to happen, especially with the December sell-off. The overall point is this, okay, guys, it doesn't matter. All you have to do is just stick to your plan of those 3 rules and only break them when the stock market crashes, and just basically go ahead and buy a lot more into your investment. So overall, all year, all I do is just automatically invest. If the stock market crashes like crazy, over 10% I lose, I go ahead and buy more investments because basically I get to buy them at a massive discount. And that's basically all I do. So if you think the stock market is crazy, just ignore it, keep investing, and don't worry about it whatsoever. And by the way, feel free to copy my strategy. I actually don't care. And as long as you're making money, well, that's all I actually care about. I'll see you guys tomorrow. Thanks for watching. As always, like the video if you liked it. On top of that, also subscribe and hit the bell so you're notified. And before I go, if you want to talk to me or text me to my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And if you want to watch a full video on more portfolios that I actually use, here's that video right here, and click it on. I'll see you guys tomorrow. Thanks for watching, and as always, peace.